Hello, everybody. Um, I want to talk quickly about the Gigacloud Technology quarter, give some quick thoughts, and yeah. So, if you've been following my channel for the beginning of this year, I started buying this around $20 a share. Brought my cost basis down to like 18, and then I was buying down all the way down to like $12 in the middle of April. So it's been a bit of a bumpy ride. Now, the initial investment thesis on Gigacloud Technology has always been the same. It's like, look, they're profitable. They have a huge amount of cash on their balance sheet. They're trading at like 5 or 6 times their earnings. If the stock price doesn't move, they'll just buy back the entire company. And for a while now, they've been kind of carrying negative sentiment from short reports that came out well over a year ago now. And I think it's becoming increasingly clear to anyone who's still, is a bear on this, is like these short reports are unfounded and are not true. Okay. So that being said, let's kind of talk quickly about the quarter, and then I'll talk about exactly what I'm doing with my position. Very strong quarter. They surprised me honestly. This year for Gigacloud Technology is like I would have been happy with like $60 million in earnings. I mean, like, look, that's a solid year. They got tariffs, a lot of uncertainty. That was kind of like my threshold, and it's looking like they're tracking quite well to do $100 million in earnings. So when I started looking at Gigacloud Technology, one thing that I kind of realized is the business is actually much higher quality than I originally appreciated because you have the United States and then you have Europe, which is going quite nicely, and then you have 1P, 3P. 1P is the products that Gigacloud Tech sell themselves, and 3P is basically they provide services to third-party vendors who are trying to sell like their furniture and stuff like that. And when I realized that the business was becoming more diversified, I realized it was a higher quality business. And as a result, I realized that it was more durable and would likely eventually get higher multiples. And we're literally seeing that come into play this quarter. The reason why this quarter was so strong is that Europe delivered actually very strong revenue growth. The revenue growth was 50% year over year. Compared to the United States, that actually had declined year over year. And it's like when you look at the United States, there's so many headwinds. It's like you had the tariff stuff, which definitely contributed to the decline. And then you have high interest rates, which is affecting home buying. And a lot of times new sales for furniture comes for new homes. It's like a very kind of logical correlation. So when I'm looking into next year, it's like, what am I expecting? It's like, okay, Noble House will come online, and then interest rates will almost certainly have come down a little bit by then. I think we all want to see another 100 basis points cut over the next year or two here. We'll see. Hopefully that does happen, and that will hopefully help the the mortgage rates. Now, mortgage rates are not directly tied to interest rates, but they do have a correlation. And the other thing that's been driving really high mortgage rates is like all the certainty in the economy. So, kind of hopeful these things hopefully get resolved. The other thing I want to kind of mention quickly about the quality of the business is they're shipping very big and bulky items. So logistics is an extremely hard problem, and it's a very underrated problem. So you can actually see it here where they're basically mentioning, hey, we have a logistics business. Um, One thing I saw that I really liked in this presentation was you can see over time, in their 3P business, once they get buyers from a cohort, they tend to be pretty sticky. So it'll be very interesting to kind of see how this business evolves over the next few years here. And I would love to see this to become a major contributor. Like it'd be great to see, 3P be like 50% of of earnings, but we'll see. Outside of that, just general thoughts. It's like we still have $300 million of cash on the balance sheet. I guess I'll talk about my position. We're going to do over $100 million in earnings, which is really great. It's more than I kind of hoped for, just given all the uncertainty with tariffs. So at this point in time, it's like I still think Gigacloud Technology is arguably cheap, and it's arguably cheap because the market cap's like $1 billion today, but they have $300 million of cash on the balance sheet. So their enterprise value is 700 million, and then they're going to do over $100 million in earnings, right? On the high end, right? I think maybe they do 150, so they'd be trading at 4.5 times earnings relative to their enterprise value. I think on the low end, maybe we still only do 100. So we'd be trading at 7 times earnings relative to their enterprise value. Even if you just go off of like their general market cap, it's like they're trading at 10 times. I don't think these forward earnings are right, by the way. I think almost all predictions for Gigacloud Technology are just wrong. I don't think analysts know what they're doing, so I just ignore this number entirely. But it's like they're basically trading at like 10 times earnings, right? Still, and things are going to almost certainly be better next year because they're facing so many headwinds in their biggest market, the U.S. this year, and they're still delivering. So I don't know. We'll see. In terms of my position, I'm going to be holding. I'm not going to be adding, and that's because it's a $50,000 position. I have another almost $100,000 in another account. So it's about 10% of my portfolio right now. It's actually a little bit more. So I don't really want a bigger position here. My total gains here are a little overstated. I took a quick loss because I thought I could recognize a loss and take it on my tax. It doesn't matter. So anyway, this position is more like $18,000 in gains, which is still good, but it's not 80% good. It's probably like 60%. So I'm gonna hold this position. I want to see Noble House come online next year, and I think Gigacloud Technology can reclaim um, a $40 share price. I think it's within reason. Management needs to continue to buy back shares. Noble House needs to come online. Interest needs to come down, and these tariffs hopefully will become settled. So yeah, for everyone who followed me this trade, congratulations. We held through a ton of volatility, and in this entire time, and like, look, just remember, even when we were like down here or whatever, I was like, look, we have a lot of cash on the balance sheet. We got 300 million cash, and we're profitable. Okay, when Gigacloud was trading at $12 a share, dude, it was like being priced for bankruptcy. Okay, this company is not going bankrupt. It's totally fine. So yeah, that's it. Solid earnings, happy with earnings. Not too much to say. At this point, we're just kind of waiting for better macro, and the future looks bright.